Hi everyone, welcome to today's session. So today's session has been titled as Investing in Indian Legacies via Small Cases. And we've been wanting to conduct such a session for a very long time because of a good amount of demand coming in from users about sessions like this. So the agenda of today's session is going to be fairly simple. It is to try to understand the types of business houses that have evolved in India over a period of time, and we will try to take both an objective and a subjective look at how they have shaped in helping the Indian economy grow, pivoting the Indian economy towards what it is today, and how these large conglomerates, what we call as conglomerates today, have basically diversified themselves into quite a lot of businesses. And we will try to see as investors how we can take advantage of these conglomerates and invest in them directly. So up until now, we have conducted a lot of sessions. There are lots of strategies available on the small case portal where the portfolios or the baskets have been designed with a certain strategy, with a certain objective, and with a theme in mind. So these small cases that we'll be discussing today are more or less designed towards enabling you as a user to invest in conglomerates directly. And we'll try to understand how that is possible. Now, before doing that, what we will also try to see is some of the larger conglomerates that are there in India right now and what kind of businesses have they diversified themselves into, which will give us a clear idea of what to expect when we head over to the platform and when we take a look at the small cases. So as usual, I encourage everybody who has questions to post it in the YouTube chat box. So whether it be a small question, whether it be a big question, you can post it over there and we will be able to take it up at the end of the session, and we'll ensure that all the questions and all the queries have been addressed, which are being inquired by the audience. So now let us try to understand by taking a look at a presentation as to what are the important conglomerates in India. And before we do that, a couple of things to notice. Some of the users might be very new to the concept of small case, to the concept of basket investing using your ICICI platform. So what we will do quickly is we will just try to understand together what a small case is, if you're not already aware of it. So a small case is nothing but a portfolio, a direct equity portfolio, or a basket of stocks, which have been designed with a certain strategy, idea, or theme in nature. So now what do we mean by this? For example, if we are able to invest in a portfolio, or if we are able to curate a portfolio with a specific strategy. Now, a strategy could be something that we notice in the market, or an idea that we are noticing in the market, or a theme that we are noticing in the market. What do I mean by a theme? For example, in India, we are pivoting more towards electric vehicles going forward. And now that is a theme that is playing out, or that is a theme that has started playing out. If we are able to invest in a portfolio which has been designed with that in mind, then we call it as a thematic portfolio. If we have designed a portfolio with a very specific strategy in mind, there are various strategies out there in the market, then that is called as a strategy-based small case. So basically, small cases are nothing but direct equity portfolios via which you can start your investment journey directly in a strategy, theme, or an idea. Now, you don't have to, that does not mean that small case is a product where you'll have to take an account, open, login, and follow the multiple processes that are involved. Small case is seamlessly integrated into the ICICI platform. So anybody who has an ICICI account can basically come over to the platform directly, use their ICICI credentials to log in and invest in any one of these portfolios. So now that we have understood more or less what a portfolio is, what a direct equity portfolio like a small case is, what we will try to do right now is start the flow by understanding some of the legacy businesses in India. When I speak about legacy businesses, I'm talking about huge conglomerates which started small, but which expanded and are shaping India's economy in a very wide manner. So to do this, let us first understand one of the groups that we are already familiar with, and that is nothing but the Tata Group. So now, Tata Groups, if we want to take a look at the businesses listed by Tata entity, so if we take a look at the screen right now, we are able to see most of the businesses that are listed in India right now, with the parent company being Tata. So we can see names that we can relate to. For example, TCS, that is Tata Consultancy Services. Then we have Tata Steel. Then we have Tata Communications, Tata Motors, which many of us might be customers of. Then we have Tata Consumer Products, Titan, Tata Power, and so on. And there are other companies which we might not be very familiar with. For example, it could be Tata Chemicals, it could be Nelco, Trent, and so on. Tata Consumer Products is something that we have always known and been customers of. So Tata is considered to be a group, which I'm sure all of you know is a salt to software kind of group, where they're dealing with products, FMCG products, which are relatively available to all consumers. For example, Tata Salt, up until Tata's consultancy services or Tata Software, which is available in the B2B format. So if we take a look at the conglomerate as such, it is one of the largest conglomerates existing, not only just in India, but across the globe. And the number of businesses that are listed, unlisted are very vast. So now, if we take a look at the sector-wise composition of Tata Group, then in IT, we have TCS and Tata Elxsi, and in steel, we have Tata Steel. In automotive, we have Tata Motors, Jaguar, Land Rover, and the other company. And consumer and retail, we have Tata Chem, Tata Consumer Products, Voltas, Titan, Chroma, and Trent. In infrastructure, we have Tata Power, Projects, Housing, and Tata Consulting Engineers. In financial services, we have Tata Capital, Tata AIA, Tata Mutual Fund, Tata Insurance, Tata AIG Insurance, and so on. In aerospace, we have Tata Advanced Systems. In tourism and travel, we have the names that you can see, including the AirAsia partnership. And then in telecom and media, we have Tata Communications, Tata Sky. And in trading and investments, we have Tata Industries and a couple of other organizations. So now all this comes under the Tata Sons holding company. Now, why do we invest in Tata as a group is something that we have to question ourselves. So one thing, or the first thing that comes to our mind when we think of Tata is, to a certain degree, businesses which are run first with ethics and businesses which are run with a solid foundation. The trust factor is very high when it comes to Tata Group as such. And these are the things which have shaped Tata to become what it is today. And this is completely undisputed in the market right now. So if we were to take a recent example of how Tata is pivoting towards manufacturing something better, let us start with an example that we can all relate to. I'm going to take the example of Tata Motors. So post the acquisition of Jaguar, Land Rover, and so on, we have seen Tata Motors undergoing a huge transformation. And we have seen vehicles that are coming out with the highest build quality right now in India. So if we were to take an example of the recent Tata vehicles, for example, it could be Tata Altroz, it could be Tata Punch, it could be Tata Nexon, Tata Safari, and so on. Tata Safari's NCAP rating is yet to be out, I believe. But if we take a look at the other cars in the lineup, all the cars have managed to achieve a 5-star NCAP safety rating, which is quite unprecedented, and which is and the leader in one of these segments, being an Indian car company, it is managing to accomplish so much in terms of the build quality. And personally speaking, the mindset that we had towards what Tata was, for example, just Tata Motors was 10 years back or 15 years back, has taken a complete transformation to Tata being perceived as one of the safest vehicles out there in India, one of the most premium build quality vehicles available at a moderate price across the nation. So similarly, Tata as a group has been making its best efforts to change its business model, or to try to pivot towards building the highest quality products that are out there. And this transformation is something that has already started reflecting in many companies which are owned by Tata Group. So we will see this directly by going to the platform and taking a look at small cases. So before we take a look at the small cases, I'm trying to give you an idea of why portfolios like that have been curated on the platform. I'm trying to give you an entire picture of what kind of companies exist within a particular group, where the transformation is happening, and why the perception is changing, and how we as investors can participate in it. So now moving on to the next company that we might all have been already customers of is the Bajaj Group. So now when we take a look at the most major entities that have been owned by Bajaj, so we have Bajaj Limited, we have Bajaj Finserv, Bajaj Holdings, Bajaj Motorcycles, Electricals, Maharashtra Scooters, Consumer Cares, Mukand, then Bajaj Hindustan Sugar, and other companies that you can see on the screen. So now, again, if we take a look at what we have or how we have started perceiving Bajaj, if we take a look at one of the best hit motorcycles in India, again, a lot of those top spots have been consumed by or have been listed by the vehicles that have been developed by Bajaj Limited. And if we take a look at one of the most successful finance entities out there, which have been producing credit cards, loans, etc., in demand right now in a seamless manner, that has been Bajaj Finserv. And many such things can be spoken about all the companies that Bajaj has been diversifying itself into. So what we have also done at the same point of time is curated a basket which are focused more towards the companies that are being run and operated by Bajaj. So by the Bajaj Group. So moving on to the sectors that Bajaj is already into, we can see that they're into automobile sector, financial services, home appliances, electrical, sports, iron and steel, and insurance. So if we take a look at how these products have also improved over a period of time, or how these sectors have improved over a period of time, the improvement has been phenomenal in nature. So insurance, again, is one of the most sought after or one of the most bought products when it comes to developed countries. And insurance is still in a very, I wouldn't say a very primitive stage, but it is still in one of the early stages in India right now. And similarly, if we take a look at iron and steel, the prices of raw materials going up, and even if we take a look at the automobile sector, all these sectors have started to grow in demand. And India, I believe by the year 2050, will be the second largest economy by then, surpassing the US. And I believe it is China first, India second, and third will be the United States in terms of the market size of the economy. So with that said, once we are able to reach to that point of time, the demand for all the sectors that you can see on the screen will or is expected to eventually start booming up quite a lot. And diversifying yourself into any of these sectors is always something that can be taken into consideration. And if you have a particular company like Bajaj in mind, which is dominant in that particular sector, what you can do is come over to the platform like we'll be showing you and taking a look at that small case. Now, let us move on to the third group, that is the Hdfc Group. So again, we are not new to this particular organization's name. So under Hdfc Group, we have Hdfc Bank. And in Hdfc Life, we have, in insurance, we have Hdfc Life, which is predominantly into life insurance. Then we have the Hdfc AMC, which is into mutual funds. Then we have Hdfc Ergo, which is into general insurance. So general insurance could mean something like health insurance, which we all require at a point of time. So again, if we take a look at Hdfc Ergo, it ranks among the top 3 private players in general insurance. And if we take a look at the claim to settlement ratio, which most people are trying to look at when purchasing an insurance product. So Hdfc Ergo is having one of the highest claims to settlement ratio, which is making it one of the premier companies that are out there. So similarly, they have also diversified into other organizations, for example, Hdfc Sales, Hdfc Credila, Hdfc Capital, and Property Fund. So under Hdfc Bank, we also have the Securities Division and Financial Services Division. So if we were to understand Hdfc as a group, those are the businesses that they have diversified themselves into. Now, let us try to understand the next group that is in question today, which is the Mahindra Group. So when we take a look at the Mahindra Group in general, the first thing that pops out in mind is probably to most of us, Mahindra cars. And for some of us who are into the tech field, it could be something like Tech Mahindra. But more or less, the first thing that comes to our mind is Mahindra Auto, which is Mahindra four-wheelers. So now let us take a look at the overall diversification of that particular organization. So when it comes to Mahindra, as you can see on the screen, the diversification has been quite vast, and most of us are not aware of the companies that Mahindra Group is has diversified itself into. So under automotive, we have Mahindra four-wheelers cars, of course. Apart from that, we have Mahindra Electric, and these are the predominant businesses. The other businesses are on the screen. And in Agri, we have Mahindra Agri Solutions, and then Saburo. And in financial services, we have Mahindra Insurance Brokers, Mahindra MetLife, Mahindra Finance, and Mahindra Home Finance. Again, in hospitality and real estate, one name that will pop out to all of us is Club Mahindra. Apart from that, we have Mahindra Life Spaces and the two other businesses that you can see. And similarly, under partnerships, First Cry is a name that will come up to all of us who have children. And Mahindra Logistics, Mahindra Retail is names that again that pops up right now. Under IT, we are all familiar with the name of Tech Mahindra, and the other three companies is something that you'll have to research a bit about. Under two-wheelers, we have Mahindra Two-Wheelers, Java, and in the aftermarkets and sports segment, we have Mahindra Racing, First Choice, which we are all aware of. Aerospace and defense, we have Mahindra Aerospace, Mahindra Defense, and Mahindra Telephonics. And farm equipment is something that Mahindra as such tries to dominate over, usually. And Mahindra Tractors is something that is a household name in the farm equipment sector. And they've also diversified into other businesses at the same point of time. So if we take a look at the entire group or the entire conglomerate, the number of sectors they are into is very vast. And under each particular sector, they've diversified themselves into a variety of different companies and businesses. One of the most, I would say, exciting things to talk about when it comes to the Mahindra Group is again something similar to Tata Group, which is their four-wheeler segment, which has been one of the most successful segments that are out there. So if we were to take a look at Mahindra cars right now, again, Mahindra has pivoted itself into making such quality cars, being an Indian company, that be it XUV 300, XUV 700, and some of their other vehicles that are out there, they've all managed to achieve a 5-star NCAP rating, global NCAP rating, which is unprecedented for an Indian company to having for having their focus too much towards the safety of users. And as all are in the future, all of us are going to be very conscious about the kind of vehicles that we are driving, the quality of vehicles that we are driving. I think the government is also becoming very particular about that. There have been rumors coming up that the government is making seatbelt even mandatory for for those who are sitting in the back seats, especially after what happened recently with one of the leaders of a private company. So keeping that in mind, safety consciousness is something that all of us are going to look at in the future. And Mahindra is, again, just like Tata Group, dominating that. Something that even foreign manufacturers or foreign car manufacturers are not able to accomplish in India. And apart from that, the demand for Mahindra vehicles have grown to such an extent that some of their luxury segment cars have a waiting period of 1 year, 3 months, 1 year, 4 months, and so on. So it cannot be attributed completely to the chip shortage because chip shortage is affecting all the manufacturers. But not all manufacturers have a waiting time of exceeding 1 year. And the reason for that is because the demand for these vehicles have drastically improved. So if we were to take a look at all the businesses that Mahindra is into, there are a lot of positive factors that can be considered into how the group is positioning itself in the Indian market and what they're trying to achieve from there onwards. So let us move on. Now that we have understood what kind of business Mahindra is attempting to establish in India, let us try to move to the next group, which is the Murugapa Group. So this is a group that might not be, I would say it would not reflect to you immediately. You might not be aware of this particular group, but it is one of the largest groups in India having a very rich legacy of conducting business in India. So the Murugapa Group is actually based out of Chennai. Its headquarters is in Chennai, and they have diversified themselves into approximately 28 businesses, out of which 9 businesses have been listed. So the names are something that you can see on the screen. So many of you might be aware of, you might be able to relate to names like Coromandel Engineering, Chola, and maybe some other groups like Paris. But if you're not into the B2B space, some of these names might not be, you might not be able to relate to it very well. But nevertheless, it is one of the most prominent groups that are out there in India. So what we have done is we have taken names like this, we have taken groups like this, their businesses into picture, and we have curated baskets or portfolios that you as an ISEC user or you as an ICICI user can invest in directly by choosing the group that you are able to relate to the best, doing your own research on which group you think will be dominating the market or which group you think has the highest chance of growing in the future, and you will be able to seamlessly start your investment journey in a group directly, which is what we term as business house small cases. So what we will do right now is we will head over to the ISEC platform directly, and we will try to take a look at how to navigate from the ICICI page to the small cases portal where all these portfolios are available directly. And we will also try to understand what details about these small cases we are able to understand before starting our investment journey. So now, with that said, what we will do is head over to the ICICIdirect platform directly. So the first thing that all of you need to do is to come over to ICICIdirect.com on your browser. So once you do this, what you can do is scroll down to the very bottom where under products, you have small case listed right over here. So this is one way to navigate, and this is the easiest way to remember it. So come over to the home page, scroll down till you're able to find small case listed there under products. So once you click on small case, you will be redirected to the smallcases.icicidirect.com, where you will find all the small cases that are listed. So out of all the small cases that are listed, how do we find the small cases that is related to the discussion today, which is business house small cases? So what you can do is you can find a search button right over here, and in the search button, you can type the name that you are able to relate to. So we spoke about the Tata Group today, the Mahindra Group today, Murugapa Group today, and so on. So what you can do is type over here, house of, and you will be able to see the names here. So if you type house over here, you'll find house of Tata small case, house of HDFC, house of Murugappa, house of Bajaj, and house of Mahindra. So what we will do right now is take a look at each one of these small cases and try to understand what kind of companies exist over here. So what I'm going to do right now is first go to the house of Tata Group. What are the things that we need to understand before we get excited about this particular small case? That is what we'll explore right now. So as you can see, the name of the small case is mentioned here, and what the small case does in a single line is mentioned here. In the overview section, you will find enough details about the Tata Group, which we feel is of importance to you for you to understand before you start investing in this small case. Now, apart from that, we as users would want to know whether this small case has performed well or whether this group has performed well or not performed well in the past, and to what degree has it performed well compared to the general market. So what we will do right now is scroll down more, and you will be able to see two graphs on the screen right now, a blue color graph and a yellow color graph. So the blue color graph shows you the performance of the house of Tata small case, and the yellow graph is showing you the performance of the large cap index. So why are we comparing it with the large cap index? Because the large cap index basically tells us or gives us an idea of the movement of market which has happened so far. So we consider the markets have gone up when the index has gone up. We consider that the market has fallen when the index has fallen. So it is better to compare with an index to see the performance of a small case. So now on the screen, when we are able to take a look at both the graphs, you can take a look at the small box that is moving along with the cursor right now. So if we take a look at that particular box that is moving, you can see the numbers changing over there. For example, house of Tata is at 150 right now. Equity large cap is at 116. I'll try to make you understand in 2 minutes. So when we take it down to the very beginning, both house of Tata as well as the equity large cap index become 100 in value. So what is it that we are trying to tell you here? We are trying to show investors like yourselves what would have happened to every 100 rupees. For example, if you had invested 100 rupees in House of Tata and 100 rupees in equity large cap index on the date of the launch of the portfolio. So you can see the launch date also below, mentioned in a light gray format. So you can see as on February 15th, 2021. That is the day on which the small case went live on the platform and investors were able to invest in the portfolio. So if you had invested 100 in this portfolio and 100 in the large cap index, you can see the movement of both the graphs. So right now, when I take the graph over here, you can also see the same gray line over there as on July 12th, 2021. So from Feb to July, the House of Tata portfolio has grown by 29% because 100 has become 29 and large cap index has grown by 100 to 103, which means 3% return. House of Tata, 29% return. Similarly, when we take it to the very end, which is the latest date which is counted, which was as of yesterday. So what you can see is House of Tata has grown from 100 to 169, which means 69% return. Whereas equity large cap index has grown from that date to from 100 to 170, which means 17% return. So there is 17% return and 69% return, which gives you a fair enough idea of how the portfolio has performed. So now this is the max performance, which will show you the performance since the launch of the portfolio, which happened on February 15, 21. Now, what if you as a user want to find out the latest 1 year performance? What you can do is head over to the 1Y button here. So 1Y represents 1 year. So when you click on 1 year, the latest 1 year performance gets displayed on the screen. So equity large cap is represented as 102.21, which means 2.21% return in the last 1 year. If I take my mouse also, you will to the end, you will see the same number under the box, 102.21. House of Tata, if you had invested 100 1 year back exactly, 100 would have become 116, which means 16% return. So similarly, you can see the latest 6-month return, you can see the latest 1 month return, and you can also check out the SIP returns. So apart from this, as a user, as an investor, we found out the performance metric of a small case, of the small case of our choice. What else would you require as an investor to know before you start your investment journey? That data is, what are the stocks that I'm investing into? So that data will be visible over here. So next to overview, you will see something called as stocks and weights. So when you click on stocks and weights, basically, what are the sets of information that you're able to see on the screen? I'll explain quickly. Stocks, 9 has been mentioned. So it's self-explained. There are 9 stocks in this portfolio. Rebalance frequency has been mentioned as quarterly. What does this mean? Every small case basket or portfolio undergoes a rebalancing, which means that some stocks are removed from the portfolio and some stocks are added to the portfolio as and when required. So the reasons could be that one stock which is there in the portfolio has outperformed and has performed more than expected and is no longer expected to perform going forward. So in such cases, it can be removed from the basket. Another reason could be it is not performing as expected at all, and or fundamentals have changed in that particular stock. In such cases, we'll be removing that stock and adding another stock which is fitting into the portfolio. That is called as a rebalance. And the rebalance for this portfolio will be done once in a quarter. So once a rebalance happens, all of you as users who have invested in this portfolio will also get a notification. So you can click on the notification and the portfolio and approve it, and the portfolio will get rebalanced. The process to do that is available online. And you can also check out the ICICI official channel to be able to do that directly. So apart from the rebalance frequency, we also tell you as users when the last rebalance of the portfolio was done, when the next rebalance of the portfolio will be done. And by going to the view rebalance timeline section over here and clicking it, you will also be able to see the dates on which rebalances were done previously and how many stocks were shuffled. So February 13th, the small case went live. March 18, 2021 to September 16, 2021, 3 rebalances were done. December 16, weights of 9 constituents were updated. March 16, no changes. June 16th, again, weightages were updated. And September 16th is the next review. Now, when you scroll down even further to market cap distribution, we are able to see what percentage of the portfolio belongs to large cap, which is shown here in this color. What percentage belongs to mid cap, which is shown here in this color. and what percentage belongs to small cap, which is a dash here, which means small cap does not have any weightage. And if we scroll down, we are able to see all the sectors that this particular small case is a part of. For example, construction and engineering, power generation and transmission, software services 11.3%, steel 9.2%, chemicals 8.3%, Tata Coffee 13.3%, and so on. So the sector-wise breakup is available in this particular pie chart, and all the stocks that are a part of this portfolio will be listed right here, and the weightages of each one of these stocks will be mentioned under weightages right over here. For example, Tata Power has a 7.2% weightage in the portfolio. Tata Elxsi has an approximate weightage of 11.3%, and so on. So now, as users, what are we able to understand about this basket? First, we understood and we tried to look at what kind of business Tata has set up, how many stocks are listed on the platform, and we were able to see how a small case has been designed, how it is rebalanced, how it is managed, what is the performance, what are the sectors, what are the stocks, and its weightages, right? Now, another exciting thing is, if you feel, for example, when investing in this small case, that you want to take more exposure to Tata Steel and less exposure to Tata Elxsi, for example, then it is fairly simple. You have something called as a customized small case option right over here. You can click on customize small case, customize, and you will be able to increase the weightage of stocks that you like. For example, let us say I like Tata Power. I can click on the plus button here, increase my weightage in the portfolio for Tata Power, and click on minus here and decrease the weightage of Tata Elxsi. Similarly, I can do whatever I want in this portfolio to curate it as per my understanding of how these companies are going to perform. And then I can save the draft, or I can click on invest now directly and start my investing journey directly on the platform. So this is about House of Tata. Similarly, if we were to take a look at, for example, House of Bajaj, for example, or House of Mahindra, for example, we can click on House of Mahindra and the details will be visible in the same way. So House of Mahindra was launched recently on July 14, 2022. And so far, the returns have been more or less index linked, with House of Mahindra giving a slightly higher return. And the minimum ticket size to start your journey will be different for every small case. For House of Mahindra, it is 6,350, as you can see here. And you can always go to stocks and weights over here. Take a look at the number of stocks in the portfolio. For Mahindra Group, it is 6 stocks. For rebalance frequency, you can take a look at it here. And every other detail will be listed in the same fashion as we saw for the Tata Group. So similarly, I would encourage all the participants today to head over to the platform. The links are also available on the YouTube channel directly. So you can head over to the chat box and you will find a link which will redirect you to this page directly, where you can go to the search box, type House of, and take a look at all the small cases that are designed with each specific house in mind. So if you want to go to House of Murugapa and explore, you can go to House of Murugapa, minimum ticket size here, performance metrics here, stocks and weights over here, detailed description mentioned right over here. And apart from this, if you want to download a PDF and go through the PDF in detail about these small cases, that's also fairly easy to do. What you have to do is head over to the fact sheet button over here, click on fact sheet, and a downloadable PDF opens up. So you can download this by clicking on the download button there on your desktop, and you can take a detailed review or a detailed explanation about the methodology of how this portfolio was designed, some of the important financial metrics, market cap distribution, performance, how to start your investment journey. All these things will be mentioned right in the PDF. This is available for all the small cases that are out there. So the reason why we conducted this particular session is to basically try to show you the most important or the most demanded small cases by users as per our experience. So people have always been inquiring with us as to why small cases which are designed using certain groups or small cases which are designed using certain conglomerates are not available in India yet. And post that, after getting a lot of feedback, we did our own research, and post that is when we came up with the legacy business houses small cases. And these 5 are the business house small cases that are available on the platform. So all of you as users can head over there. My humble request to you would be to research about these groups which are shaping India's growth going forward. Maybe some of us, who have come to attend this session today, work at one of these groups. So you'll be able to have a better idea of how to strategically think about these small cases. So on a final note, let me explain. When you want to invest in any small case, you don't have to open any new accounts. There are no additional steps to be followed. You just have to log into the platform using your ICICI credentials. Come over to the ICICI platform, scroll down, go to products, small case. On the top right, you'll find a login button. Click on login, use your ICICI credentials, login, choose the small case you want and start your investment journey right there by clicking on the invest now button. So it is as simple as that. And we have covered in a previous video how we can invest in a small case, how we can start our SIP in a small case, how we can exit out of a small case, how to invest more in a small case. And all those things have been covered in a previous ICICI webinar, which has been uploaded and is available on the official ICICI Securities YouTube channel. So I would encourage all of you also to check it out. You can type ICICI small case and things like that in the YouTube chat box, and that video will be presented to you. So a couple of common questions, let me answer right away. Small case is a platform that sits on top of a broking platform like ICICI Securities. We are not a broker. So all these portfolios, when you invest in these portfolios, the stocks that are a part of that portfolio will come directly to your ICICI Securities account. So you will own the stocks that are a part of the portfolio. Apart from that, in order to invest in a small case, that capital which we saw, which was around 6,000 rupees for a small case, which was 10,000 rupees for another small case, that much of capital should be available in your ICICI trading account because it will be debited from there. If that is not available, top up your ICICI trading account and it will be made available. And like I said, stocks will be delivered to your Demat account. And when dividends are paid by any of these companies, just like you own a stock, the dividends from these group companies, which are a part of that portfolio, will be credited directly to the linked bank account of your choice. So it is as simple and seamless to start your investment journey in a small case, once you've decided on which small case to start with. So with that said, I would like to conclude this particular session. I really hope that it has been informative to all of you who have attended this particular session. And it is my sincere request that all of you head over to the platform, take a look at not just business houses, but other small cases also. Come to a decision about how you would like to start your investment journey. And I hope that you have a pleasant experience starting your investments with small cases. So with that said, whoever has any questions whatsoever, now is the time to start posting it in the chat box. Please do post it in the chat box on the screen that you're attending the session in, and I will be able to take up these questions and answer them appropriately right now. So the first question is from Anuradha. Good morning, Anuradha. Your question is, please tell us in what way a small case portfolio would be different from a thematic mutual fund in terms of expected returns, mode of operation, and cost of ownership. So great question, Anuradha. So let us first speak about let us start from the very bottom. So let us start from the cost of ownership perspective. So mutual funds are also a great product that are out there. Small cases and mutual funds differ in certain ways. So small cases comes in the direct equity space, whereas mutual funds do not. When you're talking about cost of ownership of a small case, by this, what I'm gathering is that you're referring to charges. So when you come to the ICICI platform, if you're able to invest in a small case where the ticket size is less than 4,000 rupees, then you're not basically charged anything to invest in a small case. If the ticket size is higher than 4,000 rupees to start your journey, then there will be a one-time charge of rupees 100 plus 18 rupees GST. This is irrespective of how much you want to invest in that portfolio. So it could be, you might want to start your investment journey with 10,000 rupees, 40,000 rupees, maybe 5 lakh rupees, 10 lakh rupees. It is immaterial. So the flat fee would be 100 rupees transaction fee plus 18 rupees GST on top of it. Apart from that, no other charges are, as of now, no other charges are levied on the customer. And on top of this, what you have to also take into consideration is that small case as a product, especially the small cases that we have spoken about today, you'll find a lot of small cases which have the tag as free small cases, free access small cases. So for these small cases, there are even the business house small cases that we spoke today are free access small cases. So for these small cases, there are no entry loads per se, there are no exit loads, and there are no lock-in periods. So many other products that are out there in the market do have these charges. It could be trailing fees and so on. So the free access small cases that we have spoken about today have no such cost. So your cost of ownership will be 100 rupees plus GST. And at the time of entering the portfolio, brokerage charges, which will be levied by your broking firm, which is ICICI, the standard brokerage charges only will be applied. So apart from that, nothing else will be applied into your account. So this is the cost of ownership of a small case. So I hope that that gives a complete clarity to you. So when you speak of mode of operation, it is fairly simple. You just need to have a trading and demat account and you're done. That's about it. You just have to go to the platform, invest in a small case. The stocks come to you. The rebalance notifications also, as and when they happen, will come to you. So you just have to approve them and automatically the portfolio will get rebalanced and you're allowed to exit the small case with no lock-in period. When I say it, I actually mean it. So if you're investing in a small case today, you can exit out of the small case today itself within the very next minute. So we have no such lock-in period. So this is the mode of operation. In terms of expected returns, it varies completely in the market. Depending on the small case. So not all thematic small cases will give the same returns. Not all strategy-based small cases will give the same return. We have a very vast type of sets of strategies out there. So we give the returns that the small case has managed to generate upfront to you as the user, which you can track on the portal. Post that, what you can do is do your own research and try to find out one, not just on the returns, but one, if the strategy is suiting your requirements. Two, you can take a look at the returns and you can see if the portfolio is performing very well in good market conditions, it's performing not so well in bad market conditions, or is it the kind of portfolio which has performed in a very stable way across all market conditions, because we do have some ETF-based small cases which diversify into gold and equity. So that is something that you will have to take a look at on the platform directly and come to a conclusion as to what is best suited for your requirement. Because my small case agenda, because I'm invested in certain small cases myself, but my philosophy would be very different from your philosophy. My age will be very different from your age. So if you are coming under the 50 to 60 age bracket, then you might have to go to small cases which are more sober in nature and are not trying to achieve exceptionally high returns. You might have to go to a small case which is diversifying into ETFs and so on. If your age bracket is less than that, and if your investment horizon is 10 years, 20 years, and so on, then you can always go ahead for more risky strategies. You can always go ahead for high risk, high reward kind of strategies, because in the long run, the markets are eventually going to go up. So it really depends. So expected returns is something that I would request you to always go on the platform and explore for yourself. We have small cases which give, I do not want to say it out upfront and give the wrong perception, but you can come to the platform and you will be able to see small cases which have given returns as high as 60% per annum also. And you will find small cases which have given a CAGR of 30%, 40% also on the platform. So again, that is something that I would leave up to you to explore. So how is it different from a mutual fund, a thematic mutual fund? So again, let me talk about how it's directly different from mutual funds. Like I was mentioning here, it's a direct equity investment. There it is not. Here, you're allowed to customize your own basket when you start your investment journey. You can, or even post you've started your investment journey, you can tinker around with the portfolio because the stocks lie in your DP. You can come to the small case platform also. Before investing, you can change the constituents. After investing also, you can change the constituents. And there are no lock-in periods. There are no trailing fees for most of the small cases. So that is how I would say it is different from some other products that are out there in the market. I hope that answers your question, Anuradha. And your follow-up question would be, what is the basis for taking large cap index as the benchmark index for comparison? Why not flexi cap, since the constituents are not all large cap? So great question again, Anuradha. So what we do on the platform is we don't compare all small cases just with the large cap index. So we take a look at what is the most dominant set of stocks, which set of stocks are the most dominant in this particular portfolio? Do they belong to the large cap sector? Do they belong to the small cap sector, and so on? If there is one market cap sector, for example, for example, most of the stocks are dominant in the large cap sector, and the large cap sector's weightage is, for example, 50% or 60% in the portfolio, then the comparison is done with the large cap index. If small cap stocks are the dominant ones in the portfolio, then the comparison is done with the small cap index. Apart from that, we also do compare with the multi-cap index if we feel that that is the best suited one to compare for the portfolio. So what you can also do is, now it's too late to share my screen since I'm taking up the Q&A. Once you go to any small case of your choice, if it is comparing itself with, for example, the small cap index automatically, and you want to compare it with the large cap index, that is also available on the platform. You can click on equity small cap right there, where it is comparing just above the graph. A drop down will open up where the provision to compare it with the large cap index will also be available then and there. You can click that and the graph will change. So it is completely transparent that way. And the comparison is being done where we deem that to be fit. So I hope that answers your question in detail, Anuradha. So with that said, I think all the questions that have been requested have been addressed. So I do hope that all of you had a session which you can think about today. And I do hope that all of you have a brilliant experience with small cases going forward. So you can always reach out to the customer support at ISEC, or you can always reach out to help@smallcase, and both the organizations will be there to assist you in case of small case related queries. So with that said, thanks a lot for tuning in. Have a great day. Bye.